This lecture aims at helping you prepare for investment analyst interviews. The focus of this lecture is to tell you some key questions which could be asked with respect to technical investment analyst interviews. So starting with the first one, you could be asked about what is value and what is the difference between value and price. So you need to be super clear about why do you estimate value, what is the difference between value and price, and how does this difference between value and price lead you to assess an asset and take an investment decision. The next is what are the methods of valuation. So you could be asked about different methods of valuation, that what are the key methods of valuation, like discounted cash flow method, relative comparables valuation, or asset based valuation, and also about how each of these methods are used to arrive at the value, and which of these is the best method and which of these should be used in which particular scenarios. With respect to discounted cash flow method, you could be asked about different types of cash flows and how to estimate them. And two key types of cash flows could be free cash flow to firm and free cash flow to equity. You could be asked about their formulas, the difference between the two, and could be asked that which one should be used when. Moving on, you could be asked about the appropriate discount rate for valuation, that what discount rate should you be using, and also how to determine this discount rate or how to determine the cost of capital. What are the methodologies used, like for example CAPM or other methodologies. You could be asked about difference between weighted average cost of capital, which is WACC, and cost of equity, and also which one should be used when, and which discount rate should be used with FCFF, for example WACC, and which discount rate should be used for FCFE, for example cost of equity. So you need to be super clear about how to estimate discount rate and how to select a discount rate and how to use a discount rate for valuation, and which discount rate should be used for which types of cash flows. You could also be asked about your prior financial modeling projects or experiences. You could be asked if you have made a financial model before, how much do you know about financial modeling, and have you performed valuation before. If you mention any such project or any such work, make sure that you know it inside out. You know the key assumptions taken to perform that valuation. You know the key business models of the company which you were valuing. You know how did you arrive at the value, which discount rate did you use, which methodology did you use. So make sure that you know it in and out. You could also be asked about comparables valuation, that how to use multiples for valuation, and key multiples like price to earnings, price to sales, EV to EBITDA, price to book value, and other multiples, and also the definition for enterprise value. What is enterprise value, how is it used, how is it calculated, and which of the multiples should be used when and why. And you could also be questioned on the difference between forward and lagging multiples and which one is better to be used. Also, is high multiple good or low multiple good, in which scenario is the high multiple good or in which scenario is the low multiple better, and what is PAG and how to use it. So you could be asked about all these questions related to comparables valuations as well. That is it about this lecture. If you want to do our financial modeling and valuation courses, email us at askpvc@gmail.com. Best of luck for your interviews.